Hello, in this video we will take a look at the last process, the last step of our comprehensive problem for the manufacturing company. We will be doing the closing process here, and we're going to close the entries in this area. Here is where we will record the entries. We'll post the entries to this worksheet. We'll show a similar shortened worksheet with the beginning balance, the adjusted balance, and then the closed balance after the closing process in a similar worksheet type fashion as we had seen when we were working the adjusting process. So let's go back and see what we have done real quick, and then we will go forward. So back here on the Journal Entries tab, you'll recall that we took these transactions and we entered them in the form of journal entries. These are going to be the activity for the month, and we entered that in here. Then we posted it to the general ledger over here. So we posted that activity to the general ledger, and the general ledger was used to create the trial balance. That trial balance then, as of the end of the month, we transferred it to the adjusting department. So we have the same unadjusted trial balance is what we're calling it at this point, meaning that it's been adjusted by the accounting department, but we haven't done those timing differences that we need to do at the end of each time period. Then we did these in this similar worksheet type fashion that we will be working on when we use the closing process as well. We did that so that we can come up with the adjusted trial balance that is now in conformity with accrual standards, so that we could then make the financial statements, which is of course what we did next. We made the financial statements. So this is the same adjusted trial balance from the previous tab, and we converted this information from a plus and minus, from a debit and credit type format in the form of a trial balance to more of a plus and minus format, similar to the accounting equation, but of course in more detail, that detail being the financial statements of the balance sheet, the income statement, and the statement of owner's equity. Now we're going to move to the final step, which is the financial statements are done. We need to prepare our books for the next period, so the next month. And in so doing, what we need to do is close out the temporary accounts, which are all the accounts below the capital account. So remember that all of these accounts, we've been saying for a long time that the income and expense accounts only go up. And we're going to kind of contradict that from here, but it's not really a contradiction in this case, because it's similar to running a race, or if we're counting the miles in a race, and obviously the race is over, then we need to start a new race. Then we need to reset the odometer and be back at mile 0. And that's what we're going to do here. We're going to reset the odometer. We've got to make all these 0 so that we can then start over and start the next process. So you will also note that we'll have a new income summary account here. I'm going to call this a clearing account, and it's going to be 0 before the closing process. It's going to be 0 after the closing process. There's going to be 4 steps to the closing process in this case. We're going to close out revenue, which is sales, to income summary. And then we're going to close out the expenses, and I'm going to include the contra accounts of the returns and allowance and discounts when we do the expense closeout, because they act like expenses, and we're going to put those into the income summary. Then we're going to close out the income summary to the capital account. Then we're going to close out the draws to the capital account. Now, theoretically, we could do this all in one process. We could just close out the entire thing with one big journal entry. We could just make this whole thing one number, which is 178,936, which is the capital account as of the end of the time period, the end of the month. And we can see that if I go back on the financial statement tab, we can see that here, and we can see it here. So we're basically doing this process for the most part and crunching all those numbers down to the one number in the capital account at the end of the time period. But we're going to do it with a 4-step process. Couple reasons. One, it gives us a kind of a check figure when both the expenses and the income have been closed out to the income summary, because at that time this will have net income in it, being that 4,386, and all these should be 0. So then we can kind of check if we're doing that correctly before we close that out to the capital account. Also, when you move on to next problems, or problems that have to do with partnerships and things like that, then oftentimes many books will say something like, we allocate the income summary account before it was closed out to the capital accounts in the form of partnerships. And we have to be able to understand, if you see that kind of textbook problem, that means that net income is in there. So you got to know that before we can do the problem if we're allocating net income. So sometimes books and questions and exam questions will ask in that format. So First thing we're going to do, close out sales. So sales has to go to 0 so we can start the new race over. It only goes up until the race is over at the end of the month. And then we start it over and we start the odometer over. So we have this at a credit. We need to make it go down to 0. How do we make something go down? We do the opposite thing to it, which in this case would be a debit. So I'm going to copy this, right click and copy. We'll move up to the top here. The date on this, by the way, will be 4/30. And note that this will happen sometime. We're not doing this on 4/30. Obviously, it's not going to be the exact end of the month when we do this because we had to close out all the transactions. We had to do the bank reconciliation. We had to do the adjusting entries and then do this. But we, of course, will be closing as of that date in terms of the transaction date. And I lost my copy, so I'm going to copy it again. Copy it, and we're going to paste that on C5. Right-click, paste it, 1, 2, 3. The amount of the debit, 61000. We're also going to debit an equal amount, just 2 accounts in this particular transaction for 61000. And we're going to close that out into the new income summary account. So this is our new clearing account. It really means nothing. It's just holding the balance until we finally close out to where we want it to go, which is capital. So I'm going to copy this. I'm going to put it right here in C6, right click and paste it, 1, 2, 3. All right, let's close this out and see if it does what we want it to do. What do we want it to do? We want sales to go to 0. So let's do that. We're going to put our cursor in I18 equals, and then we're going to point to the 61,000 debit, and this should go down to 0, and it'll put us out of balance down here like so. All right, then we're going to go to the income summary in I17 and equals, and we're going to point to the credit in income summary. Then this should go up to that credit balance of 61,000 and put us back in balance down here. There we have it. All right, so there's our first 0. We want to make all these 0 now. So we're going to go down to the rest of the accounts and do the same thing. Same date being 4/30. All transactions for the closing process will be as of the end of the month, 4/30 in this case. And we see that the sales, returns, and allowance, we need to make that 0. It's not an expense, but it's like a contra sales account, so it acts like an expense, meaning that it always has a debit balance for the most, well, it always does. We need to make it go down. How do we make it go down? We do the opposite thing to it, which in this case would be a credit. So I'm going to copy that. I'm going to go under the date here because it's going to be a credit, and we're going to have one debit on top, which is going to be the income summary account. But I'll put all the credits in there first. So I'm going to right click and put pasting 1, 2, 3 for the amount of, I'm going to put a credit negative 500. We could make this a little bit longer so we can see more of the space here. All right, so, and then we're going to go to the next one. Obviously, once again, contra sales account kind of acts like an expense, though it has a debit balance in it. We need to make it go down. So how do we make it go down? We do the opposite, which in this case would be a credit. So I'm going to copy this. We're going to see a trend here, of course. We're going to paste it in C12 or C10. And the credit will be for negative 600 in this case. And once again, we go to the next one, which is cost of goods sold. Cost of goods sold is an expense account. It's our most important expense accounts, and it generally always has, it pretty much always has, it will always have a debit balance in it, unless something very strange is going on. So we're going to copy that. Once again, it has a debit. We need to make it go down. We're going to do the opposite thing to it, which in this case would be a credit. So I'm going to copy that. I'm going to paste it in C11, right click, and paste it 1, 2, 3. Now, a lot of people get intimidated by this journal entry because it doesn't have just 2 accounts. It's going to be a long journal entry, but it's pretty basic once we get to it. We're going to make all these go to 0 by doing whatever we have to do in order to do that. And then the debit will go to the income summary account. So that's going to be, what do we have to do to it? 37,442. There we have that. Next account, salaries expense. Another expense account, and expense accounts have debit balances, and we need to make it go down. Therefore, we're going to do the opposite thing to it, which in this case would be a credit. So I'm going to copy that. I'm going to put that in C12, right click, and paste 1, 2, 3. Then we're going to go into the credit column and put a negative 13,600. All right, here we go again. Depreciation, expense. Another expense has a debit balance. We need to make it go down, so we're going to do the opposite thing to it, which in this case would be a credit. So I'm going to go ahead and copy this and put that in C13. Right click and paste 1, 2, 3. And we're going to put a negative, in this case, 450. All right, here we go again. Insurance, what? Insurance expense has a debit balance in it. We need to make it go down to 0. Therefore, we're going to do the opposite thing to it, which in this case would be a credit. So I'm going to put that on the next one.